Recording in some.
Hello there, beautiful traders. Welcome back to our channel. My name is Desmond Samuel, and this is yet another episode of our weekly outlook. So, in this particular series, this is a segment of my YouTube channel that I've dedicated to coming on here every weekend to give you guys the potential trading opportunities for the weeks ahead, and then show you guys how you can go about capitalizing on these opportunities with your boy Desmond Samuel. So, without wasting any much time, let's just kick things off. So the first part on my list is NzdUsd, as you can see here, it's just highlighted here. Now, majorly, I like to do something called a top-down analysis where I go from the monthly time frame to the weekly, to the daily, and then the 4 hour. All right, just give me a sec. So that's practically what I like to do. So I like to go from the monthly to the weekly, to the daily, to the 4 hour, and then obviously maybe 1 hour if need be. So from the higher time frame perspectives, we are actually headed south. Okay, this is a downtrend as you can see here. This is a high, this is a lower high. All right, so it's just giving series of lower lows and lower highs. Yeah, so this is like the external structure, external bigger trend. Then you have the internal trends here, which are like the trends that you and I will trade. All right, so without wasting any much time. So the overall structure here is quite bearish. However, once we begin to scale all the way down, you get to understand that we could have a medium term trend within a major trend. Okay, so now this is a downtrend, no doubt here, because once I pull up my trend line here, you can see that everything just lines up to the downside. This first touch here, let me draw that nice. So it's first touch, second touch, third, fourth touch. All right. So typically, it is usually on the third touch of the trend line that the market tends to move significantly. And as you can see here, it did just start already, just collapsed all the way down here. So, however, we are now stuck here. I think I highlighted this level even in our previous episode, and I told you guys that this is actually a crossroad because now you don't actually know what direction that the market wants to go to because on one hand we have something that is looking like an inverted and shoulders pattern where you have the head and the shoulder, then on the other hand you have another head and shoulders pattern here forming, which would be complete once this comes to put a Fibonacci up here. All right, so it's quite like a crossroad. So what I like to do for um for scenarios like this is to actually leave the pair, right? Just leave it, let it just do what it wants to do. If he wants, see, listen, if the market wants to go up, he has to come and break this level, all right? If he wants to come down, yeah, he has to break this level. So there are no two ways about it. It's just either you're going up or you're coming down, or you're moving sideways, and you stand a better chance of making money when the market is either trading to the upside or to the downside. However, in this range here, in this particular sideways movement, I have no business with the NzdUSD, to be very honest with you, because I do see something that looks like a bigger Fibonacci play from this swing low to swing high. Okay, and the market is sitting on a 0.618 level. So it's quite confusing at the moment. The pair is quite confused at the moment because it's not sure if it wants to go up or if it wants to come down. The major time frame trend, which is the monthly and the weekly, is bearish. However, I want to come down to the immediate trend, which is the daily time frame. You can see a lot of confusion here. However, me personally, I highlighted this yellow bar as the deciding factor, one of the two deciding factors for this pair, because actually we are out of the uptrend. As you can see, we are out of there. Okay, so because we broke this trend line now, however, the market is here to break this level here. So we had like three deciding factors. We had this resistance bar here, which is also looking like it wants to put a right shoulder, and then we have this trend line which was broken, and then we have this minor support level that the market is currently resting upon. Okay, so for me, like, this is just not enough. I don't see this as enticing at all. Although I do like NzdUSD, but this is not enticing at all, because even if you draw a fifth level, you can see that the market is probably heading towards fibs. Okay, probably going to the fib level. So whatever thing he wants to do, it is entirely up to you. For me personally, I like to trade the most obvious pairs, like the most obvious setups. Like a child has to be able to look at this pair and tell me that this thing's going up. That's how obvious I like. I like my trades. I'm not really a big fan of overcomplicating things. It is the simplest things that make money in trading. All right, so just keep it very basic and keep it very, very simple and neat. As I said earlier, the two deciding factors are this yellow bar here, this yellow resistance bar, and then this yellow support bar here. So whichever one holds is fine. However, you also need to understand that there's also a bigger Fibonacci play playing here from this recent low to recent high here, from this low to high, and the market is currently reacting. Okay, so you just have to give it time. I think you should leave NzdUsd for another 2 weeks. Let's see what happens. All right, so that's about NzdUsd in a nutshell. So the next pair on my list now will be EurUsd. So let's see what EurUsd has for us. EurUsd gave me some money though. I won't lie. He made us some money in our Telegram community. By the way, if you're new to this channel, make sure you hit the subscribe button and check the link in the description to bring you straight to my Telegram community. And then you also see my recommended broker, which is XauUsd, which is what I trade with. All right, so for the euro, this is the bigger time frame outlook. This is what it is looking like on the major time frame, on the weekly time frame. Right, so we do seem to have like a large Fibonacci play here off of the highs of the 2021 and 2022 bear run here that we had here. So we do have a fib play, and the market is just taking its time to chill, because now one thing that you need to understand is that, you know, if the market has fallen this way for 2 years, you should expect at least, say this move lasted for 2 years, you should expect at least 6 months to a year worth of consolidation or sideways movement, and that is exactly what the market is doing. Okay, so for every impulsive move, there is a resulting or resultant consolidation. So say for instance that the market has trended like this for like maybe 2, 3, 4, 5 months, you should expect that the pullback or the consolidation should last at least 2 months. Okay, at least 2 months. Because the market only trends for 40% of the time. The rest of the 60% is actually in a box, stuck in a box. As you can see here, this has been stuck between this guy and this guy since 2023. You can imagine, since 2023. In fact, actually 2022 December, we'll be stuck here. We're stuck dancing around here in this box, literally between this line and this line. Will be stuck. All right, so that is just how the market goes. And even within this consolidation, if you're smart and skilled enough, you can actually find trades, because even within this whole mess here, you can see some nice pullbacks. All right, you can see some nice, beautiful pullbacks here. So I personally traded this one here. I think I don't think I did anything much around this level. I don't think I did much around this level. Hold on, I think I see something. Hold on, I think I see something real quick. All right, so like I said, we are out of the inner uptrend line. So and then we're not playing around the outer trend line. So this is actually very, very this is a very, very, very delicate point here for this pair, because anything could happen at this point. This is a 50-50 zone. We could actually pull back into the trend line, or we could actually collapse further. Okay, so for EurUSD is sitting at a decision zone, here, as you can see now, and this is exactly the reason as to why I opted to take my profit here, because I know that if you look left, you can see some major mess here, and this was also a solid demand level. Right, this was also a demand. Let me just extend this so you can see what's happening. So this was also a demand level here, because the market actually respected this level here. It respected here. So these were like solid demand levels for the market. This was a nice supply level. So definitely you would expect the market to just play around this level a bit and not just drop out of the air like rainfall. Okay, so that doesn't, the market doesn't work that way. So for me personally, I'm just sitting on my hands, particularly because the dollar index seems to be pulling back inside. I don't know what's happening, but it just seems to be pulling back inside, which is very, very normal. Okay, like I said, you don't expect the market to just keep falling and keep moving in your direction. Sometimes it has to take a break and then recoup and then continue in the overall direction. But me, I'm still favoring these guys to the downside. Now, the only reason as to why I'm actually concerned, which is something I'll be showing you guys on the dollar index, is, listen, this, as you can see here, is a head and shoulders pattern, no doubt. Okay, no doubt this is head and shoulders pattern. However, this right shoulder is not as convincing as this left shoulder is, in the sense that you listen, you can see the wave pattern here. You can see the wave pattern for the left shoulder. You can see the wave pattern for the right shoulder. This only put in a flag pattern. Let me just scroll down and show you guys what I'm talking about. So on the 4-hour time frame, you'll actually be able to see the flag pattern properly. So this only put on a flag pattern. All right, it did not pull back deeper. It didn't give us a deeper pullback. So one thing that you need to understand is that in the market we sometimes have the first smaller pullback and then we have the bigger pullback. So it was after I saw this flag pattern here, then I was like, okay, fine. I'm not really a big fan of trading range breakouts. I know that a lot of people have entered here, then put their stop losses maybe here or maybe above here, then targeted here. But nah, I'm not. I just don't like that method. All right, so I rather just wait for the pullback, and that happened. Okay, and then that was also a Fibonacci level play for me. So I just waited for the whole thing to align, and then I think I had some entry. Stop losses above both Fibonacci levels, and then I watched my trade hit my TP. So but if you switch back to the dollar index, you actually get to understand that this is a bit tricky at the moment, because now, due to what the dollar index is doing, make no mistake, we have actually hit all our targets across all the pairs I called. Okay, we have actually hit our targets. Which I'll be showing you guys just in a bit. So let's talk the XY. Let's talk dollar index. So the dollar index, I actually highlighted this level here as the take profit point, and we smashed right into it. However, this is now looking like he wants to put in a bearish pin bar. Okay, you can see that the last two candles approaching this place, experience some serious selling momentum, in the sense that this was this opened bullish, and then it closed as a pin bar, as a bearish pin bar, as you can see. Same thing here. So I'm not 100% confident in the fact that the dollar will continue like this. I do actually envision, I feel like we may actually come back down to just retest this level here a bit. Okay, so it will not be a complete inverse head and shoulders pattern within a bigger inverse head and shoulders pattern. Okay, if you look closely, once again, this is a shoulder pattern, this is a head, this is a shoulder pattern. So I feel like we may actually come in and then retest this level here before we now finally blow all the way out to the upside, if that's what the dollar index actually wants to do. Now the reason as to why I'm talking about this thing is because if you're in my Telegram community, I mentioned this thing earlier. I said sometimes we do have smaller pullbacks and bigger pullbacks, and then as you can see here, that is exactly what is happening here. The dollar index broke out of here, then dropped all the way back down. So now this particular retest is not enough so in one way to know when the market has gotten to the point where it has to retrace is by using a Fibonacci. That's practically what I use. You will never see me analyze a pair without using Fibonacci. It's zero chance. All right. So if you see, this is the high, yeah. Okay. Now this is the high, this is a low. If you take your fibs and measure it, you can see that the market did not quite pull into the fib levels at all. And the market loves Fibonacci. The forex market loves Fibonacci. It loves Fibonacci. Forget about all these things that people are telling you. It actually loves Fibonacci. And Fibonacci helps you know where the market will potentially stop retracing to and then start to pull back. All right. Now, if you're the type that loves to trade a pullback trade, then that's fine. But for me, I rather wait for the market to align at the points where I want it to align. So you can see that by the time we popped our heads up here, we actually fell back down, and then we did not rally a bit. Like, the pullback was too small for this drop. Okay, this pullback here, this particular pullback here was too small for this drop here, for this collapse. So this is the actual major pullback, is this one. Okay, you see this one lines up well with the 0.61 region, and then the 0.5 region, and then it's also putting in a bearish. This is also putting in a pin bar, and then this is also around a trend line, a downward trend, and then also a resistance level. So we have three confluences here pointing this guy to the downside. All right. I'm telling you this for free. I will not be surprised if I see the dollar do something like this, just collapse back down here, complete this inverse head and shoulders pattern here, then now finally rally all the way to the upside. That is exactly what I think the dollar might want to do. Hence, I'm not really active on the on the um on the likes of EurUsd, GBP I'm not really active on there because this is a deciding factor. We could actually, in fact, have collapsed all the way back down. It's very, very possible. All right. So one thing that you must understand when you're into trading is that anything can happen at any time. Okay, so it is your risk management and then your edge that keeps you in the game long enough to become profitable. All right. So this is exactly what I feel that the dollar index might want to do, because now we have hit a resistance level, and then not just a resistance level, a Fibonacci level, and then also a trend line level. So this could potentially be the third touch of the trend line here. Who knows? All right. So this coming week will be the deciding week for the dollar index to finally make up its mind. So if it wants to fall back down, it's entirely up to it. If it wants to rally all the way up, it's entirely up to it. Whatever it does, one thing is for sure, that will make money. All right. That is just that. No two ways about it. All right. So if you now come down to the 4-hour time frame, you may see a 4-hour time frame pullback, which is normal, and then you actually do see a fake out here. Now, one thing about fake out that you need to understand is that when the market fakes out like this and then fails to retain the direction, it fails to continue in that direction, it tends to reverse in the opposite direction in a big manner, in an exponential way. So now that we've seen a fake out here, because we've not been able to sustain the break above here and then we'll pull back down, I will not be surprised to see the dollar collapse all the way back down here. Okay, I will not be surprised at all, because it is very, very possible. And as you can see, we did not even retest this level properly. So let me show you guys something real quick. This is the Fibonacci from swing low here all the way to swing high. You can see that the 0.5 and then the 0.6 region lines up perfectly to this point here. However, we do have a trend line. Okay, so I'm just listing these things for you to actually understand what you're dealing with here, because a lot of things could happen at any time and then you could get into the wrong trade or anything. So this is a trend line now that will now decide whether this market is going to collapse all the way down here, or we'll just continue rallying all the way to the upside. So this is the first touch, this is the second touch, and then we may have a touch somewhere around here. And then if this fails to hold, ladies and gentlemen, we should actually see the dollar index collapse all the way back down to 102.600. Then from there, we'll now tell in what direction that the general market wants to go. However, for me, this is also a deciding factor. We don't only have to break this trend line, but also break this minor resistance, which should turn support should in case this breaks this trend line here. All right, so that's just the in-depth analysis on the dollar index. Mind you, we could actually still rally all the way to the upside. So for me, I'm favoring this guy to the tune of 60% to the downside and then 40% to the upside. However, keep in mind that anything is possible, and then this is not a financial advice. So the next pair on my list now would be the cable. All right, the next pair on my list would be cable. GBP is practically the same thing as cable, so please take note. GBP see this I think this one I had the drawings. So this is the cable in a nutshell, something quite similar to what the euro is doing. Okay, all of them are actually at a deciding point, as you can see right here. So now this is same head and shoulders pattern that we actually saw on the euro, is what is actually happening right here. So like I said in our previous weekly outlook, this is the bar for the pound sterling. This is the bar here. Okay, so if we do get a sustained break below this support level here, then I'm actually very, very confident that we should actually see this guy collapse to the tune of 300 plus pips, 370, roughly 370 pips. All right, but this is the deciding factor, because now we have actually broken out of this trend line, and then we're currently retesting the back of that's the outer part of the trend line. Okay, this trend line is coming from all the way from 2022. All the way from 2022, that's 2 years ago, and then it's currently at play here as we speak. So like I said, two things holding this guy down. Actually, 30 things holding this guy down. The dollar index, action. This is the pound sterling here, as you can see. So I just adjusted my trend line properly, and you can see that we are still playing just around. This is currently still retesting the trend line. So it is quite indecisive, and I cannot say exactly what it wants to do unless it does what it breaks this minor support level. So once it takes out this support level, then I am very, very confident that without any doubt in my mind, 90%, in fact, 99%, I favor this guy all the way to the downside, back to this blue level here, because this is a key level. And as you guys know, the key level is a magnet for the potential for the majors. All right, so the key levels are like magnets for the majors. So the majors tend to rally rather than all the way, they move from one key level to the next key level. All right, so these minor levels are just to guide your trades. The main profit target for every trade rather is just a key level, from key level to key level. So I won't be doing anything much. However, you can see that we have actually started putting in a downtrend here, in the sense that we went from putting a low to high, higher low, higher high, higher low, higher high, higher low, higher high, all the way to putting a high, a low, lower high, and then we put equal lows. All right, so this is a new trend forming here. However, it is quite unclear as we speak, because if you check the weekly time frame, the candle actually closed back above bearish, as you can see. Okay, it closed back around the trend line. So it is quite indecisive at the moment until we see a sustained break below here, maybe with a bearish weekly or daily engulfing bearish candle. Then we should actually be confident enough that this guy, without any doubt, would collapse. However, due to what the dollar index is doing presently, I'm very, very patient for this pair. I think this pair needs another 2 weeks to just make up its mind. All right, and then but you also need to understand that this is a Fibonacci level as well. This is also a Fib level as well. So just give this you see the euro, the dollar index, and then the GBP USD, just give it like another week or 2 weeks to just decide in what direction it wants to go. For me personally, it's just two things. It's just two basic things. It's either we break below here, okay? Because see, one thing you need to understand is that, for the market to go up, it has to break this level now. Do you get? It has to come and break here now. It has to break this level. And for it to go down, it has to break this level. So as long as this guy remains in between this bar and this bar, I have no business shooting this pair. That's one thing that you need to understand. You must set your traps for the market, and then you must have contingency plans. As long as this pair remains in between these two horizontal bars, I have no business coming on here. Okay, I have no business. I probably just go and read a book or maybe travel the world or something. I just have no business coming on here to force anything, because there's absolutely nothing you can't force anything here. Okay, the market is very, very indecisive. You can see the kind of ugly ass price action that has happened here. So it is quite indecisive for the moment as we speak. So like I said here, the deciding factor here is this support level or this resistance bar right here. Once we can clear either of these ones, then we now have a clear and precise direction. However, for the meantime, I have absolutely no business, trading this particular pair for the moment. However, like I said, I do favor this guy 60% to the downside, all right, and then 40% to the upside. So whatever the market wants to do, once again, even if it goes up, it comes down, we will make money. The only time we don't make money is if the market moves sideways, all right? So even if it collapses or it rises, Charlie will make money. So chill. So the next pair on my list now would be gold. So this particular pair called gold, I called out gold in my Telegram community a while back. I said to these guys that my prime target for gold was 1940, and then I think I spoke to one of my guys yesterday. I was like, bro, me for gold is 1940. However, this is where we stand currently. So we do have a trend line break here. So this was the uptrend line. So it has been broken, and it was actually retested, and then the market is now currently sitting on a support level, which seems, let me just check something. Is this what I think it is? Which actually seems to be a Fibonacci. So you see, all these pairs are actually looking to the upside a bit. However, they are stuck at the crossroad, because one has, in fact, all of them have practically broken out of their major trend lines holding them. So it's just we just need that extra confirmation, just that extra tip of yes, like that extra thumbs up. Just give us that extra thumbs up. Like, fine, this money is about to go down. Then fine, I will obviously hop on the pair. However, from the look of things, it's not looking good at all, because I was hoping that this weekly bearish candle will close below this bar. So if it close below this bar, then I would scale down to my daily and the 4-hour time frame, looking for pullbacks like this, and then obviously hop on there to just drop it. However, that didn't happen. Instead, we closed back above this bar here. However, once you scroll down to the daily time frame, this seems to be looking like a retest. But mind you, this is not actually a kind of retest that I would like to trade, to be very, very honest with you, because once again, I love Fibonacci. Okay, I love Fibs. So for me, I was expecting that we'll get something like maybe from here, maybe a collapse to this point. So if the market had fallen to this point, or even this supply level here, okay, or even this supply level, that would have been convincing a bit. However, that didn't happen. Okay, so for me, I'm very, very careful with this pair called gold, because anything is possible. So we could actually, blow all the way back up, which, as you can see, we have broken back above this yellow bar here. So like I said, I really do not have any business trading any pair that is indecisive. Okay, I am very, very okay with sitting on my hands until the pair is ready. I can't force anything. You can't force the market. You can't impose your will, okay, on the market. It does exactly what you want to do, and then you look for a way to capitalize on that as fast and as much as possible. So I think probably the next pair, second to the last pair on my list now, will be UsdJpy. So now I want to take you guys through something real quick, something that you need to see. So let me go all the way from the major time frame that I love to do, so which is like the monthly time frame. All right, so this is the monthly time frame here, as you can see. So on UsdJpy, we do seem to have something very significant playing out, very, very huge. This is an inverse head and shoulders pattern playing out on the monthly time frame. By the way, once again, I'm here to be the first person to highlight this thing and show you exactly what is happening before it comes up. Now, last year, was it last year? Yeah, I think last year I came on here exactly as of January, and then I broke down this move on UsdJpy here, this particular move from here to here, and then you guys made money. We all made money. Everybody, we're all happy. So now this is me coming again to show you what is happening. This is a huge chart pattern, bro. This has been forming since 2004. I was just a kid back then. This has been forming since 2004, and there is usually a range principle that states that the total amount of pips accumulated from the or let's just say within the range. Okay, so the total amount of pips accumulated within the range is usually equals to the total amount of pips that the market would potentially break out into. So in the sense that we actually do have an inverse head and shoulders pattern that has formed here, and has been validated in the sense that the neckline has been broken and retested. However, now, if you want to measure the amount of pips this could rally into, you're looking at from here to here. So I just cloned my key level, and then I brought it all the way here. So you can see that we do have something that looks like 8,403 pips to the upside. Now, mind you, this could take, obviously, that even for the market to give you 100 pips, it takes like, I don't know, 3 days, 4 days, 5 days. So this particular pair here, it might take us up onto maybe 3 years to actually actualize, or even say 4-5 years to actually actualize, to actually hit our potential take profit for this particular trade here. All right, so half of it is gone already. Sorry, almost half of it is gone already, because I came on here to let you guys know on time what was happening. Okay, so we have actually broken out of this, and then we actually retested, and they were actually headed in the other direction. So how I intend to take advantage of this particular blow up to the upside is so this is also a deciding factor, because now we have actually rallied into a resistance, a major supply level, not just a resistance, a supply level that has sent this market back down previously. Okay, you can see that we came on here, it sent us back down. We came on here, sent us back down again. So now we're actually playing around that level. So a sustained break above here, once again, a sustained break above 151.774 would now tell us, or with a bullish maybe weekly bullish engulfing candle break above here will now let us know that, okay, fine, it's actually time for us to start buying this pair. Otherwise, I do not see the reason as to why I should start buying this pair or selling this pair at the moment, because I do not see any confirmations yet. So that's just in a nutshell what has been cooking in UsdJpy, or rather on UsdJpy since 2004. We have a major chart pattern. This is a monthly time frame. This is not 1 minute, 1 hour, 4 hour. This is a huge time frame. All right, so you can see how long it took us to get here. So best believe it should take us at least 3 to 4 years to actually hit the overall target, which is 214.588. So I'm actually the first person to tell you about this on YouTube. Your other mentors have not seen it, probably the same, but they're just not interested in the JPY pairs, which is fine. But I love them. I love most of them, not all of them. So I'm telling this for free that we actually have a huge rally coming in on USDJpy, and the deciding factor is 150.774. So a breach above this level here, we should see the JPY rally all the way up to first level target here being so how I got my first level target is simple: range, measure, extend, easy. All right. So if we have done 2000 plus pips here, we should actually do 2000 plus pips here. All right. So step by step until we get all the way up here. So you can see it's quite easy and simple. So this is a range here. Clone that, extend it. This is another range here. So a weekly bullish engulfing candle break above, a break and close above here, then I'm perfectly ready to start buying USDJpy once again. All right. So let me just scroll down to the daily time frame, so you see how it looks on a smaller scale. So this is how it looks on a smaller scale. We made so much, guys. We made so much money off of USDJpy. You have no idea. For real. Yeah, this is why you need to check the link to come to my Telegram community so you can join us in riding this wave. See, the key thing here is to pick a pair that is about to trend for at least 500 to 1,000 pips, or maybe even 300 pips, and then you scale down to the level. So how do you know when a pair is about to give 500 to 1,000 or 300 pips? By simply going to the higher time frame, maybe monthly, weekly, then analyze and then point at the direction. Then you now scale down to maybe your 4 hour time frame, your daily time frame, and now trade in the direction. See, listen, I did not place the trade and then hold all the way up here. Nope. I placed like series of trades. We placed series of trades, not just one trade. Like, bro, we're buying here, we're buying here, buying here, buying here, buying here, buying. We've been placing series of trades, all right, series of trades, and you can only imagine how much we've made so far from this pair, and it is yet to give us another one. It is ever ready to give us more money, and that's one thing about the market is that, if it has given you money before, just give it time, to relax, and then to just take a break. It would always be back to give you more money, and then the market must always meet you prepared. All right. So the last pair on my list now is the now, sorry, before I skip this, I need you to understand something real quick. All right, I need you to grab something real quick. So like I said earlier, based on Fibonacci moves, we do have a a minor pullback, and then we have a bigger pullback. So judging from the Fibonacci standpoint, we have not actually come back to retest this level properly. All right, this particular broken level here, we have not come back to retest it. So my fingers are crossed, because we could actually see once again this pair drop down here to just retest this properly, just play around with this properly, then we now rally all the way back up. So for me personally, these are the deciding factors. We do have the supply level here, and we have the Fibonacci, and we have this previous support, previous resistance that has to become support for us to actually know that this pair has actually put all the way back down. So the last pair on my list now would be BTC. Now that is the one that is actually ready for you guys to trade from look of things. Actually, let me talk about one pair. So I called out this pair EurJpy in my Telegram community. I don't know if I included it in my previous episode of Outlook. So this was EurJpy in a nutshell here. So we did have a breakout of this point here. So this was let me just go down to this. You can see the waves properly. The beautiful waves forming on this JPY pairs. All right, so you can see the whole vibe here. So this was like the recent low, and then this was the breakout here, pullback, and then so this was too linear, and then this whole move was too linear because guys, if you draw your trend line, you can see how linear this whole thing was. You can see how linear it was. That's not healthy. We have something called healthy trend and then unhealthy trend. So that's not a healthy trend at all. So I was kind of banking. I mean, obviously, like I said, there's a minor pullback and then there's a bigger pullback. So I was kind of banking on something, something wavy, like let the market just flag, and then it did just that. So it didn't do just that anywhere, but it just lined up with, once again, my favorite tool, Fibonacci level. So everything was just so lovely and so clean because it just lined up perfectly. Okay, and then this was also a demand level here. So this was a demand level. We had some little fake out here, and then the market blew up to the upside, then came back to retest it again, giving us yet another Fibonacci level. All right, so but me personally, I was like, since we are still within this downtrend here, that is quite risky for me to enter the trade here. So I waited patiently. I was like, okay, fine. I'm just gonna see what the market is going to do, how long it will take us to break out of this flag pattern, and then we actually did breakouts, and then we came back to retest. So this was the entry point here. My first TP was here, and then it has been smashed. So it was 161.458. If it does me, check my Telegram community. I called out the trade there live for them. All right. So it is actually en route to go to our next TP, which is 16, which is let me just look for the rounded figure. The rounded number there is, hold on guys, the rounded number is 163.500. All right, so that is my next profit target, is 163.500. And as you can see, profits locked in, break even taken, some profits locked out, and then we just leave some to just, we used to call that one the sacrificial lamb. So we just let that one keep rolling, and then let's see what the market has to, give us some more. So the last part of my list now will be BTC. All right, so BTC is the one that is actually looking like it is ready to give you guys money. Okay, although I'm not really a big fan of trading cryptocurrency, but why not? I can break it down for you, my dear followers. So oh, so tired, guys. BTC, Bitcoin. So from the higher time frame here, we do have, you can see that I was actually thinking that this supply level will hold, and then we could see BTC collapse all the way back down here to retest this head and this inverted shadows pattern, but that didn't happen. Instead, this was what happened here. This was a neckline that was broken and retested anyway. The neckline that was broken and retested, and then I was actually banking on something like this, since we have a trend line coming on here. So I was actually banking on something like this that would actually send BTC back down for a third touch of the trend line. However, that didn't happen. Instead, we actually got here, and then we decided to, reverse. I don't know why BTC did that, but you see, that's one of the reasons as to why I don't really like to trade, cryptocurrency, because it's not as stable as other pairs, or it's not as stable as the currency pairs. But anyway, anything can be traded with this approach, that is TDA to the world, top down analysis to the world. Anything, even human beings. If you could trade humans on the forex market, believe me, it is possible. All right. So coffee, sugar, wheat, silver, gold, EurUsd, the GBP USD, whatever pair it is, you can trade it with this approach. So now that we have actually breached this supply level here, it has now exposed the all-time highs of BTC, so which is 68.997.75. All right, so it is exposed as it is naked staring at you. There's actually nothing standing in between the way anymore. The major obstacle has been taken out. So how do you now capitalize on this? Quick one. So you scroll down to the lower time frame. Like I said, go on the higher time frame, identify the direction of the trend of the pair, and scale down to your lower time frame and make entries in that direction. Okay. So as you can see here, we do have a breach of this supply level here. So what you need to do is just wait for a pullback. It's easy. Just wait for a pullback here. Wait for the pullback. So wait for BTC to fall back down to 46K or thereabout, just maybe a flag pattern, whatever thing that he wants to do here, but just wait for a pullback, and then we should ride this guy to the all-time highs. Okay, so that is BTC for you. It's just wait for the pullback here. This also lines up with Fibs. This also lines up with Fibs. All right. This is the most recent low. All right, so this also lines up with Fibonacci perfectly. So what you should do is wait. Obviously, when you enter this trade using a Fibonacci, you should take out your 100%, sorry, 50% of your profits. 50 to 80% of your earnings should be locked in at the 100% retracement here, and then let the rest run if you want to run, or give you some more money, because certainly the market will not just fly all the way up. It's gonna wave. It's gonna give you waves, ups and downs. Okay, it's gonna go up, come down, go up, come down, go up, come down. So just take out your 50% profit here. So, but at least put something in your pocket, put some money in your pocket so you can feel alive. You can feel alive, guys. Put some money in your pocket so you can feel alive. And then, obviously, without doubt, I don't see the reason as to why the BTC should not, rally all the way to the all-time highs, which is, I think, 68K thereabout. Okay. I don't see any reason as to why BTC will not rally into 68,997. All right, so that is about this our weekly outlook. Once again, if you're new to the channel, if you like value, like what I just gave in, hit the subscribe button. Check the link in the description. It's gonna bring you straight to my Telegram community. Also check the comment section. You see my recommended broker XauUsd. They have the best spreads, best service ever. So see you guys on the next episode. Peace out and have a profitable trading week ahead. Bye.